Where do metals go from here? We examine the question this week in a special series, Heavy Metals, to help us kick it off. One of the most accurate forecasters in the world for precious and industrial metals, Bloomberg Best Jason Schenker is president and chief economist at Prestige Economics. He joins us now from Austin, Texas. So, Jason, thanks for joining us. First question I got to ask about silver, because it was really, I think, the most interesting of the commodities movers, especially because the COMEX upped margin requirements 4 times in a week, a move that a lot of people thought odd at the very least. Where does it go from here? Do people think that maybe the guys on the board of the COMEX have something against being long silver, so you might as well forget about it?
Well, I don't think they have anything against people being long or short any positions. I think what they want to do is ensure market liquidity. The truth is that these prices for silver, for most of the industrial metals, and for energy as well, are likely to trend higher throughout the base of this year and for next year. None of the fundamentals have changed in terms of the outlook. You're still looking at very strong growth. You're looking at a trend weakness in the dollar. And you're looking at a number of other factors on the supply side that are going to be quite contained. And that still means that even though we might not shoot immediately back to where we were, the trend is going to continue to go up.
So to set the record straight for the conspiracy theorists out there, the cynics, the skeptics on COMEX and silver, you think they're seriously on the level here? Because they did the same thing when the Hunt brothers were trying to corner the silver market back in the 70s, right?
Well, I don't really want to comment on whether what the COMEX might be thinking and what their logic might be behind raising these. What they're trying to do is make sure that there's probably not additional speculation that isn't covered, to make sure that the positions that are out there aren't overexposing people in the marketplace. And the shoot higher was quite quick, but the collapse that ensued was also very, very volatile. And there are a few things that likely engendered that. The first thing is you had a number of participants, not only on the street, but also on Main Street, looking at this, wanting to buy in. Gold is much more expensive than silver on a per ounce basis. You see additional increase from individuals as well as institutional investors. That interest is not going to go away because the prospects for a long-term dollar depreciation is not going away. Concerns about inflation are not going away. So even though there's been a correction, when you saw the price beginning to come down a little bit, a number of players can get stopped out very, very quickly. A lot of blood on the streets, but you are likely to see that go back up, but perhaps in a more muted fashion than what we saw.
So, Jason, you're obviously pretty upbeat here on the metals market. You're bullish, to say the least. We talked with somebody else yesterday who had a pretty different outlook for metals and commodities really overall. It was investor Mike Arenstein, and we talked to him yesterday. Listen up, everybody.
I think you've got a lot of these commodities in the hands of people who own them, not because they need them or use them, but because they are counting on somebody else to take them off their hands at a higher
market,
price.
Are you talking about? Or?
Yeah, and the, we're 10 years into this process. The commodities bottomed right around the beginning, around the turn of the century, really, and people have looked backward at the trend and now have a notion that that's a good predictor of what the future is going to look like.
So, Jason, that's some of his thinking in terms of why he sees a 5 to 10 year bear market for commodities. You're laughing. Why don't you buy it?
There are a couple of things. First of all, I think the notion that people buy investments that they themselves may not use is accurate. I think most of the people watching this show, most of the people on the planet who buy certain stocks or bonds, commodities, annuities, any kind of investment they're out there buying, they may not be doing it for personal consumption purposes. On the commodities side, there are a couple of things here that aren't going to change. Institutional investors and individuals look at this market and say, wait a minute, commodities are bought and not sold. The comments from the other analysts from yesterday, they sound a lot like the real estate comments, which are, well, people are buying it, hoping someone else buys it. And with houses, that might be true because no one has to buy your house. No one has to buy your condo. But people do have to buy energy. They do have to buy metals. Companies must buy these. These are critical components of global growth. And if global growth is is not going away anytime soon, at least the next couple of years, it's very difficult to imagine growth going up, demand going up, and the dollar going down, and these metal prices going lower just because of some sort of concept that people aren't going to buy them back from someone else.
So what do you say, buy them all, or do you have some favorites here?
Well, I think at the current levels, there are a few different metals that look like they're poised for significant upside. I think that if you look at gold and silver, that trend is going to go higher because they are being bought up by foreign central banks as a specie, as a reserve currency, because you see countries like China turning away from the dollar. This has been going on for a number of years. And what they're doing is they're buying up precious metals as a second way to boost their monetary, basically their money supply, their monetary base, without printing more money. So that's not going to change. You also look at some industrial metals. I really like nickel. I think the price of nickel is going to go up on trend. It's at the end of the energy cost curve, and that's really, really critical. And I think those are aluminum. You're looking at that going up.
Got it.
Copper is perhaps weaker right now.
So. We got to run.